Are you looking for a VPS to run your Forex indicators and expert advisors on? Today I'm going to talk to you guys about our sponsor of this video, which is forexvps.net. Forex VPS offers a cloud-based VPS for traders who are looking to run indicators and expert advisors from anywhere in the world and can be accessed from anywhere you are. Their team offers 24/7 customer support and will even help you set up your VPS if you need any help with that. If the configuration is tricky to you or you're not great with computers, they are there to help if you need it. Their state-of-the-art VPS servers are optimized for brokers in the UK and the United States, but will work for other countries as well. So instead of running your computer 24/7 and working it a lot to keep those indicators and charts up to date, go ahead and check out forexvps.net for their state-of-the-art VPS services available now. If this sounds helpful to you, there's a link down below in the description, and if you use code NICK30, you're gonna get 30% off of your purchase using the VPSs they offer. So check it out.
What's up, guys? Welcome back to another video. Today I thought we could do something a little bit constructive, both for my own trading and maybe for some of you guys as well. Now, one of you, or sometimes I get the comment that I show more winners on my channel than losses, which is actually true because I think that there's a good bit of constructive learning that we can do from wins. Definitely, like, you know, when something works out, you want to talk about it so that we could potentially look for more sort of scenarios like that. But I think it is also important to talk about losses. And so we are going to be taking a look at a loss that I took here on GBP Swiss, a rather annoying one, to be honest, because it continued in the direction that I was hoping for right after I got stopped out. But what I'm going to do is let's pop up on the screen right now my GBP Swiss alert that I shared with members. And again, this is a trade that did not go so well, but you can see here I said buying GBP Swiss at a pullback zone, also knowing that retail is currently short biased on this pair according to myfxbook.com. I pulled up the information about it, and retail traders were mostly short on that pair at the particular time. Now, I should also mention, if you can see right here, this is right around where I took the trade. I've got it zoomed in there, and in a little bit we'll fast forward and show you guys what ended up happening. So I'm going to talk about the entry and the exit and why I took this trade, that sort of thing. So like I said, according to MyFX book, retail was heavily short, and I put a stop underneath structure. So let me actually draw in now kind of what I was looking at the time of taking this sort of trade. Now, I kind of liked this area as a potential zone of support. So what you'll notice is that we came down to this point. Again, assume that when I'm looking at the trade to take it, it was right around here. So I see that there's this big area of support, pretty strong area. We're in a healthy uptrend. We're holding the 200 SMA very, very nicely. You can see multiple points where we bounced off of it and continued. And I really like the idea of just being long and trying to ride with this momentum. One more thing is that the A1 trading dashboard, if we go to the scanner, I've got pullback zones on, and I also like the fact that we were entering into kind of a pullback zone and holding it for the most part. You can see it's this kind of clear lining. By the way, if you want that tool, it is down below in the description, so check that out. So I get long here right around this point because I see that price looks to be like it is going to hold this area again. Okay, so price is coming down into this zone and each time holding its own. So right here, I end up getting long in this area. Again, we can pop up the screenshot and you can see in more detail what the entry actually looks like. So I enter into the market, and next we have to talk about the stops. Okay, so I put stops a pretty decent distance away. So what I noticed in terms of a stop is I use structure for my stop losses most of the time, and I noticed that there was kind of this area of kind of this roof area, if you will, to where price broke out very, very strongly. You can notice that we had like 5 strong bullish candles here on the 1 hour chart. And I ended up really liking this area as a point of kind of a line in the sand for bulls, if you will. So I enter right here and I say, hey, if price breaks underneath this, then I probably just want to be out of the trade, and my entry just wasn't as good as I was hoping for, which foreshadowing, it wasn't. So basically, this area was where I wanted to put a stop underneath. So I end up putting a stop underneath this sort of resistance point on the chart. And what you'll notice is that I think my stop loss in this area was just not the best placement because when we fast forward, you'll see. So I end up getting long here, right? I buy into this trade right around this area. often, you might say, well, Nick, you didn't get the best entry point. And that is actually true. I want to say also, I wasn't super impressed with my own entry here because my entry point was just not great. Honestly, if I was to take this trade again, of course, this is hindsight, but I think waiting for this level and being patient enough to actually get in here would have been the better call. And I am by no means the world's greatest trader. I don't want to try and come across as perfect because I'm not. I've had overall consistency, and I've definitely, I would definitely consider myself more successful than I used to be, but I'm not a golden perfect trader by any means. So I think that my entry was kind of poor, and that's just me kind of giving my own criticism to myself. I enter here after it starts to rally. I say, okay, I'm pretty confident that this looks like it's going to rally back to the previous high, and that was a very, very logical place for price to continue if the trend was to just kind of rocket off in that direction. So I get long here. My stop is around. So the stop loss is 1.21164. 1.21164. So we can actually mark this area right here, just roughly here is where my stop loss was. Okay, so I enter here. These are rough numbers, so I'm sorry if it's not perfect. But you can notice here, we can use the tool here and we can say, okay, well, how much was this? This was about 38 pips. So it's not like I was risking massively. 38 pips for swing trades is really not, tremendous. It's not terrible. But check this out. Here's what basically happened. If we fast forward, you can see right away from where I got into the trade, things just did not go well. And this is what I mean by I should have just waited for a more opportune entry point because although I risked 38 pips, had I taken the trade on this bar, right, where I initially liked this area of support, if I just took the trade here, look at that. Suddenly it's only risking 25, 26 pips. This is far better risk management because, again, when you're patient enough to wait for those entries, yes, you might miss the trade every once in a while, but to me, it's just better to take less trades with higher quality sort of stop scenarios than to force trades. So definitely giving myself the criticism I deserve there. You can see that. So price kind of holds this area. And at this point, I'm still confident in holding the trade because I'm like, okay, well, I didn't get the best entry, but I still think this zone should hold. And of course, I was wrong because I'm not always right. And so we can see here's where price just kind of crumbled. And here's the annoying part is that, it's one thing that I still would have been happier to take this trade here, right? I probably should have just been patient enough to wait for that. And I know people are going to comment, oh, well, Nick, it's a double top. It's clearly going to come down. And there's always that hindsight bias when you're watching somebody else talk about their trades. And I understand that too. I've definitely come to accept that as a YouTuber in this space. You get a lot of criticism for people who tell you, oh, you should have done this, you should have done that. I will be my best critic, I think, and I think you guys will too. When you're looking at your own trades, when you're looking at your own scenarios and your own strategies, you are going to be the best critic of yourself. No one else will be able to tell you, oh, you're stupid for this, oh, you're stupid for that, because they don't know exactly how your strategy works and how you are as a trader. So just a little side note, I know I'll get comments like, oh, you should have done this, but the point is you should be able to criticize yourself and do it in a way that's constructive. Anyways, I end up taking the stop right here, the full stop, lost 1R on this trade. And here's the annoying part, and I think maybe a good lesson for you guys who are watching, who may be newer to trading and experience this sort of scenario. Watch what happens. I go to sleep, the next day comes around, and look what happens to pound Swiss. We start rallying back the other way. And I think that there's some temptation here that I want to address. A lot of times we as traders see that, okay, we got in here, we got stopped out here, it was a losing trade, and then what happens? Well, we get frustrated because we see market reverse just after nailing our stop, and we say, oh, well, next time I'm going to do a bigger stop. Maybe that'll help. And you slowly make your stop loss way too big and your risk to reward gets all junked up. That is a dangerous hole. And then here's another dangerous hole. Another dangerous hole is I'm just going to, no more stop loss. It always reverses every time I put a stop loss right after I get hit. So I'm not going to use a stop loss anymore. That's another dangerous scenario because it only takes one time where it doesn't reverse back and it keeps going. And in those times, you would be so grateful that you had a stop loss. Imagine for a second that we look here at pound Swiss and I get stopped out here and then the trend goes like this, right? Had I chose not to use a stop loss, it would be a disaster. So I'm going to say this. when you talk about strategies and concepts, there's always something that would have worked better in hindsight. But you need a strategy that works in real time, right? We can't always just be looking in the past and be like, oh, I should have done this. Oh, next time I'll do this. Because that's dangerous. It can be a very, very bad habit to build to not put a stop, not put any sort of risk management on your trades. So again, not the best trade that I've ever had. I think I lost a small amount. I think I lost about a percent on the trade, something like that, maybe just shy of it. But I ended up taking the full stop loss, let the trade run out until it hit me out for the trade there, or for the loss, and then the price continued to rally against me for the next few weeks, or not against me, but you know what I mean. It went in the direction that I was hoping for, and I guess if I was watching this pair a little bit more closely, I could have jumped back in and found another point of entry. I was bullish on this pair, so my analysis and my bias was correct, but my timing was off, and that is something else that we as traders have to accept, is that sometimes you can be right about the direction, but your timing can just be off. And it's more important, in my opinion, to manage your risk properly and to be, careful and slow and steady with your positioning and not putting your account at giant jeopardy than it is to always be correct. You see these little stupid things on the internet that are like, oh, quote unquote, sniper entries. I'm a sniper in the markets and all that. And I've been doing this for a long time. I've seen that joke for as long as I've been in the trading world. And I can tell you that every successful trader I work with, they care less about getting the perfect entry, and they focus more heavily on the other components of their trading. Things like psychological discipline, risk management, placing better stops, exit strategies, identifying strong trends, keeping an eye on the fundamentals. These things are more important than saying, oh, the technical analysis here says that at the price level here with the moving average doing this and that, it's going to be the perfect entry. I've done this for a long time, and I have never run into somebody who has the perfect entry all of the time. Sure, you can improve your entries. Sure, you can look for better scenarios to get in, but claiming that you have the perfect entry is just not really realistic, because the markets are never going to always act one way. Otherwise, it would be too easy and everybody would just be doing that strategy, right? So just a little bit of a rant from me. I hope you guys enjoyed. Thank you very much for watching and enjoying watching me lose, because it's good for all of us to lose every once in a while. It's a necessary component to improving as a trader, and this is just an experimental scenario. If you like this video, please subscribe to the channel down below. Give it a like if you enjoyed this particular video, and we'll see you back in the next one.